This chart looks scary. We've just made a major rejection of this resistance uptrend line. This is something investors are worried about. This is something many traders are looking at. So what does it mean exactly for stocks? If we zoom out here, you'll see the 2009 to 2020 bull market, and you'll see we have a level highlighted here. This is our long-term target for the next coming bear market. But is it time to step in and short right now? Did we really just make a top of a bull market? We're going to answer that very clearly in this video, and we're going to do that with 4 precise points. First of all, we broke this major trend line that we were looking at on the daily chart. We broke it, we had a sell signal, and we hit our first target right here. So is this another stock market crash? Are we going to see moves like this? Does this look similar to what we had during February? We were shorting stocks throughout this period. We had reasons to stay short throughout this period. So what are the technicals saying right now? Let's first look at the moving averages. That is a great way of seeing how strong a trend actually is. So these are the 3 key moving averages on the S&P 500. So does this look similar to this? No. Right now we are consolidating above the 50-day moving average. And during the month of March, we cut through the 50-day moving average like it was nothing. This look is a lot more promising than this look right here. So for now, we have no reason to worry too much about a significant correction like this. But you do have a reason to go ahead and press the like button on this video to help support our channel and the content that we put out. Thank you very much for doing that. And the second thing we can talk about is the trend line. Is this really the only trend line to be looking at right now? We were looking at this trend line to give us a quick sell signal to exit our long positions, which is exactly what happened. This was a very quick signal and protected the precious gains that we've been accumulating on this run up. But there is a second trend line to be looking at on this chart. And that trend line goes from this reaction low here, capturing this one here, and we are currently consolidating right on this trend line. The more the reactions a trend line has, the more important it is. This is a very important trend line. We have many reactions along it, and we're currently consolidating above it. We can use this trend line to make a nice price channel of the uptrend that we've been in so far, and you'll see this is a perfect textbook price channel. The bottom of the price channel acts as support, the top acts as resistance. We have 2 major reactions, and the middle acts as both support and resistance in this channel. So objectively, from a technical standpoint, this is a great place to buy. This is a great place to sell. This was a great place to buy. This was a great place to sell. Now, can we break this trend line and cut through it? Absolutely. And if we do, our thesis will change. But for now, we have no reason to suspect that that will happen. The probability of a bounce is much more significant, and we're going to give further reason for that throughout this video. Now, another great worry or question that we can ask ourselves is this correction too big for the move that we've seen so far? So we're going to clear the chart a little bit. And to answer that question, we can use Fibonacci retracement levels. You can take the retracement level from this low here, capturing the entire rally so far all the way to the top, and you'll get a list of retracements. We've hit and consolidated around the 38 retracement level right here. This is a typical retracement level for a move like this. So again, this is not out of proportion. There is no reason for now to think that this is anything more than just a correction along an ongoing uptrend. Now we can look at the hourly chart on the S&P 500. This is the hourly chart. This is the correction we've just had, and we're currently showing divergence. So we had divergence right here. We had a lower low on the price right here, with the MACD making a higher low. That actually triggered a major rally, and that was the buy signal for a major move up in the markets. We had the same thing right here, a lower low on the price and a higher low on the MACD right here. That was another great opportunity to buy in to the stock market. And what are we currently seeing? If we zoom in, we see a lower low on the price and a higher low on the MACD. So again, a divergence in momentum during an uptrend. If you want to get into this rally, this is a great place to do so. Now, of course, this can absolutely fail, and if it does, that means that we are no longer in an uptrend and that we've begun a downtrend. But what are other investors actually doing? And if you know our content, if you've been following this channel, you'll know that we love to look at market sentiment, know what the herd is doing, and we want to do the opposite of what the majority is actually doing. So to do that, we can look at two major things that we look a lot at on this channel. The first being the put-call ratio, the number of people that bet the markets are going to go down divided by the number of people that bet the markets are going to go up. And we talked about it being at an extreme low level right here, and that we could potentially get a big snapback in the put-call ratio with a sharp correction. And that's what we got. We got a snapback in the put-call ratio, and we are back to the middle of this range. The green line being at an extreme fear level, and the red line being at extreme greed. So in other words, it is much less risky to be buying right here than it was right there. This is a chart that you can get on Sentiment Trader. They have a lot of indicators, articles around the market sentiment. You can click the link in the description to access their website and use our code for a 20% discount on their membership. Now, we like to think of the put-call ratio as the short-term sentiment. It can predict short-term moves. It predicted this move right here. It predicted this short-term move right here. But getting an extreme put-call reading like this does not mean that you will be entering a new bull market. It means that you're probably going to get a snapback. For longer term trends, we have to look at the actual sentiment. This is the AAII sentiment survey, and you can see we have almost 50% of investors who are bearish. That is absolutely massive. You can see compared to the 30% historical average, and there's only 23% of investors who are actually bullish. Be greedy when others are fearful. Having only 23% of bullish investors in the market is a once-in-a-lifetime opportunity to follow that rule. Now, we can actually look at this data in a historical perspective on an actual graph. And you can see this puts things into perspective. The red line being extreme greed and the green line being extreme fear. Right now is the moment to be greedy. The moment this line starts to get back into this range right here, that's when we're going to be looking for a top. That's when we will be short. We will be actively looking for shorting opportunities in the markets. Do you really think it is possible for the markets to have topped when most investors are bearish? Do you really think that most people are going to be right about this? We absolutely do not think so. We do believe this is an opportunity for a long trade. And before finishing the video, we would like to thank our sponsor, PrimeXBT, for this video. We think PrimeXBT is the best Bitcoin platform for margin trading. You can trade the S&P 500, other stock indices, Forex, cryptos. PrimeXBT lets you trade with up to 100 times leverage on stock indices and cryptos, so giving a relatively small position size a huge potential. Of course, you should know that trading is risky, and that taking on leverage works both ways. PrimeXBT was able to sustain the volatility of the flash crash in March, which is rare for a trading platform offering that kind of leverage. Now, as always, good luck on your trading and see you next time.